The S&P 500 closed 45 points from its all-time high Friday. NVIDIA jumped 4%. Meta surged 6%. And the president ended the Iran ceasefire the exact same day. The market partied like none of it mattered. If you're new around here, do me a favor. Hit subscribe. The free weekly market note is linked in the description. No paywall, no spam, just the note. Let's run the week that was. S&P 500 gained 1.23% to 7,575. Nasdaq powered up 1.74% to 26,281. The Dow lost 0.50%. That split tells you everything. Tech and chips led, traditional names lagged, and the rally narrowed into the end of the week. Thursday was the stress test. 90 Iranian targets hit overnight, oil flipped red, and the Nasdaq still closed up 1.3%. Friday was the victory lap. Hynix debuted on the Nasdaq gray market up 13%. NVIDIA recovered that Thursday $197 scare with authority, and Meta ripped nearly 6% on AI capex enthusiasm. Pull up the S&P weekly. That's a green candle closing within 0.6% of the all-time high at 7,620. Long lower wick down at 7,421. That's the dip buyers showing up midweek and not letting go. Price is extended well above the short-term trend at 7,340, which tells you momentum is real, but you're stretched. The Nasdaq weekly tells the same story, only louder. A full 1.74% weekly gain on heavy volume, closing almost on the high of the week at 26,281. Tech is leading, and leading convincingly. Now the charts that actually matter for next week. NVIDIA Daily is a textbook recovery candle. After that Thursday test down to $109, where it barely held the long-term trend at $197, it exploded 4% to $211 on 148 million shares. That's volume you don't ignore. It closed above the midterm trend at $206, which is the first real technical win in 2 weeks. But here's the catch. The upper channel resistance sits at $219, and the all-time high is $236. This is a bounce, not yet a confirmed new uptrend. The short-term trend still hasn't crossed back above the midterm. Strong, but not invincible. Meta is the more interesting chart. A 6% single-day move to $669 on double average volume, and it closed above the upper channel at $663. That's a breakout, plain and simple. The stock was in a clear downtrend from $744, found a floor around $540, and on Friday it didn't just bounce. It smashed through the channel ceiling with institutional-sized volume. The moving averages haven't even turned bullish yet, which means there's fuel if this follow-through, but breakouts without full MA alignment can fail fast. Watch for a backtest of that $660 level early next week. Oil? It's the chart nobody's looking at that might matter most. WTI closed at $71.41, down nearly 1% on Friday. Let me say that again. The president announced the ceasefire is over, and oil closed red. Not just flat, down. The market simply doesn't believe supply disruptions are coming. Price can't even hold the short-term trend at $72. It's trading below every major moving average, with the lower channel at $76 now acting as overhead resistance. That's a market that's either very complacent or very convinced that the Strait of Hormuz stays open. Both can be wrong fast. SKHY sits at $52.89, basically where I told you to wait for $51 before adding. It bounced off that $50 low this week, but couldn't reclaim the long-term and mid-term cluster at $54.55. Small green candle Friday, no volume conviction. If oil can't catch a bid on geopolitical headlines, SKHY isn't ready yet. Keep your powder dry. Here's my read on next week. Semiconductors, AI, memory. This group can absolutely keep running and test those all-time highs. SK Hynix starts official trading Monday as SKHY, and that IPO momentum is real. The UAE chip export relaxation is a tailwind for NVDA and AMD. Memory shortage extending to 2030 per SK Hynix's CEO. That's a multi-year narrative. But hear me clearly. The higher this goes in the next few days, the more you should be protecting profits, not adding. New longs chasing up here? Bad risk-reward. If you're sitting on gains from the 197 at NVDA bounce or that meta breakout, start tightening stops. Cash is still a position. Next week's calendar is loaded. Monday, SK Hynix officially goes live on the Nasdaq. Expect fireworks. Expect sell the news risk. Tuesday is the big one. June CPI at 8:30 a.m. The Fed's Warsh already signaled inflation concerns from Iran, tariffs, and tech costs last week. A hot number, and this whole rally gets stress-tested. Wednesday brings PPI. Friday gives us retail sales, which will tell us if the consumer is still alive after that PepsiCo warning. Bank earnings roll all week. JP Morgan, BofA, Wells Fargo. And let's not pretend Iran is priced in because oil went down. A weekend escalation changes that entire setup by Monday morning. Risk board. CPI Hot Tuesday is the most obvious one. SKHY sell the news after a 13% gray market pop is the textbook setup. NVDA facing $219 resistance right where the upper channel sits. Oil is the wild card. If it spikes above $76 on military action, the entire disinflation narrative unravels fast. And the VX is still above 16 on a week where the Nasdaq made new highs. That's the options market refusing to believe the coast is clear. Trade the setup you see, not the one you want. Protect winners, don't chase. And keep one eye on Iran all weekend. Trade safe.